fell for a second straight quarter.
We're in a recession, and it's not the time to increase taxes or spending.
Economists say the slowdown is due in part to retailers cutting back on inventory as Americans tighten their belt in the face of record-high inflation. Plus, recent rate hikes by the Federal Reserve have pushed up mortgage rates, causing cutbacks in new home construction. White House economic advisor Jared Bernstein. Consumer confidence down, GDP down. What does that tell you?
Look, we know that Americans are facing real headwinds in this economy, particularly from inflation.
But he insisted that doesn't amount to a recession, not with unemployment still near record lows and consumer spending up in the second quarter by 1%.
Recession or not, fiscal and monetary policy usually change. Steve Leisman joins us right now with how Washington recession playbooks are likely to be different this time. Good morning, Steve.
Hey, good morning, Becky. Yeah, if the U.S. is in or about to enter a recession, it could be a rougher ride for investors and American workers because Congress and the Fed are less likely to come immediately to the rescue this time. Fiscal and monetary stimulus have been the mainstays of Washington's recession playbook in the past, but it's unlikely given that they were part of the problem this time, and more stimulus would do nothing but make inflation worse.
Story of the day, I wish it was not true, but after 2 straight quarters of negative growth, we are officially in a recession. In 2020, this was the very definition of a recession. Look at that. According to CNN and CNBC and the LA Times and the New York Times and Nancy Pelosi and pretty much every notable economist and pretty much everyone else on earth.
Capitol Hill, Executive Vice President at the National Taxpayers Union, Brandon Arnold, joining us with the latest economic headlines on the Hill. Welcome back, Brandon. Good morning to you.
Good morning.
The National Bureau of Economic Research says a recession is, quote, a significant decline in economic activity that is spread across the economy that lasts for more than a few months. The GDP report shows the economy shrank by nearly a percentage point in the second quarter, combining that with the first quarter's 1.6% contraction. And Brandon, why is there any question as to whether or not we are in a recession? Bottom line, Americans are hurting. They are frustrated with inflation and the never-ending rise in price on everything.
Yeah, I mean, the main reason why there's a debate right now is because we're just a few months away from an election. So this is mostly a political argument, not a real substantive argument. And there are some reasons why there are some positive signs in this economy, the labor market being the number one issue that has been strong and that is seemingly all that Biden talks about. But the fact is we've had negative growth. We have inflation that's absolutely uncontrollable right now. And American families, the most important indicator is talking to American families and American businesses. And if you talk to them, I think they will say that something's very, very wrong with this economy, however you want to label it, a recession, a decline. It doesn't matter. People are hurting out there.
I'm so glad you mentioned that because on Thursday night, just last night, President Biden said that the nation's on the right path. The administration arguing we're not in a recession, as you said, because the labor market is so strong. What's your thoughts on that?
There is no question that rising inflation and the concern for a global recession has been on the mind of investors over the last few months, causing the markets to experience some of its roughest stretches in years. Joining us in studio now to discuss hopefully a better second half of the year, we've got Julian Emanuel, Evercore ISI Senior Managing Director. Do you think it's going to get better in the second half?
Well, probability dictates that after a down 20-something first half, that the odds are it's going to be better in the second half. And, you know, in a week or two that has been full of downbeat news, we can step back and we can say that in terms of inflation, one thing that we're focusing on, gasoline prices have started to decline. That's a positive. The other positive is that yields have started to decline. And in a year where a lot of this volatility is being caused by the fact that stocks and bonds for the first time in 25 years are consistently moving together, yields declining is a positive.
So yesterday, it's hard to know exactly how long it's going to take for those supply chain issues to get unsnarled. But she argued that if we really were in a true recession, you'd see mass layoffs, you'd see businesses shutting down, and that's not what's happening right now, Gail.
That's when it all goes up. But your wages, when did your wages start to drop? Ooh, the day he was sworn in. The day the Democrats took the majority in the House, the Senate, and the White House. When did it really start dropping hard? The day they passed the American Rescue Plan.
The bill in addition to the money that the government would be spending that year in the budget that we vote on, the discretionary budget we vote on, Democrats decided we're going to spend that much and more. Not going to spend just twice the normal discretionary spending. We're going to spend twice the normal discretionary spending plus another 25% or so. You know, we spend every year about $700. Last year we spent $780 trillion to defend the country. That's a third of the money, roughly, in the $2 trillion American Recovery Act. We spent less than $700 billion to do everything else that we vote on. All of the other discretionary, all the debates we have here about spending are spending that results in a little less than $1.5 trillion of spending that are part of the normal budget. So when you double that, and then you add to the doubling of that, you put all of that into the economy at one time, you're clearly going to create a situation where you have inflation.
Thank you for joining us. Right now, we're in an important moment for our economy, and it presents an opportunity for us all to take stock. Coming out of the depths of the pandemic, the United States experienced an historic economic recovery, a rebound that's unmatched in our nation's modern history in its speed and scale. Right now, even in the face of global headwinds, including a war in Europe and successive variants of the pandemic, our economy remains resilient. Our unemployment rate stands at 3.6%, household finances are strong, and industrial output continues to grow. This outcome was not preordained. In January 2021, when President Biden and this administration took office, the unemployment rate was at 6.4%. 834,000 new jobless claims were being filed each week on average, and 20 million Americans were receiving unemployment benefits. Only 1% of Americans had been fully vaccinated against COVID-19, and over 3,000 people were dying from the virus each day. In many respects, by the time President Biden took office, our economy had been brought to a standstill. At its core, our remarkable progress since then has been driven by this administration's policies, particularly through timely and targeted fiscal support in the rescue plan, combined with a vaccination effort that allowed businesses to reopen and Americans to get back to work. Over the course of the administration, our economy has created over 9 million jobs, and the labor market is now at full employment. In 2021, we saw the biggest single-year decline in unemployment on record and the biggest year of economic growth in almost 4 decades. Fixed investment has recovered to pre-pandemic trend in just 2 years. By comparison, in the last 2 recessions, this never happened. And during this time, we also reduced the deficit by $1.5 trillion. These statistics are not abstractions. They represent American workers back at work, families with more financial security, and businesses, small and large, that have been able to hire and grow. As President Biden has said, we've entered a new phase in our recovery, focused on achieving steady, stable growth without sacrificing the gains of the last 18 months. We know there are challenges ahead of us. Growth is slowing globally. Inflation remains unacceptably high, and it's this administration's top priority to bring it down. We know how difficult higher prices